Good morning, everyone. Happy Monday. This is the London session on TopstepTV. So it's the last day of February. My God, doesn't time fly? Okay, so if you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D. I have been trading for 18 years, specializing in some of the more unusual products, such as copper, which is what I've got going on today. Now, copper from the daily chart, from all higher time frames, to me looks pretty toppy. So if we go to the weekly chart, we have a massive bearish engulfing in progress. Now, whether that brings us a full rotation through this massive jump upside that we had prior, this could be called single prints, but it's not exactly single prints because we have built up some structure prior. So if you look at it from the volume profile, it basically yeah, it has a lot of volume in it. So this entire zone could be one big supply, or it could be reaccumulation. At this point, we don't know. So we have to start drilling through the time frames. But we do have that bearish engulfing, which is technically a reversal pattern, right? Now, on the daily chart, I have all of my levels here, so it looks a bit messy. So let's just try and make it a little bit bigger, because these are all intraday levels, so they stack up. Similar story, right? So we had a reversal, smash through the lows, and most recently a bearish engulfing there. Right, so let's have a look at what's going on the profile itself. I will be using the London specific values. So London value low is around 455.90. So we have opened below value, not too far away from it. So there is a chance that they go up and test it. However, they already tried that. And on the first run, that failed. We also have some options activity levels around there. We have some puts and an HVL, which could mean if we go higher, we could run into a gamma exposure flip. So, you start in a certain volatility, like let's say lower volatility. If you go over these levels and you manage to sustain above or below them, that brings a change in the market maker sentiment. Did I put the full screen on? I did. Yeah. Okay. So that was the first sign for me to maybe try a failed auction of some sort, and that is exactly what I'm doing. So HGH is the current front month for copper. Copper is pretty sensitive to CPI and things like that. So obviously, recently we've had some numbers that that affected copper, which is why we had all that movement. And we're going to see if that can maybe continue. So, yeah. Topstep is the chart that you're showing us, but what is it that you look at when trading? What other screens do you look at? What other software are you using? A lot of people want to know that. So I've always maintained a separate charting software. I'm a bit old school because obviously it started 18 years ago. And back then you didn't really have everything all in one, right? You didn't have an execution platform that also is your charting platform, and then you smush everything in the same platform. So effectively, I always kept a different charting package on the side. And for me at the moment, that's kind of bouncing between NinjaTrader and MetaTrader 5 via AMP. Now, MetaTrader 5 is where my company in 2015 built the indicators. Primarily because I'm based in Europe, and at the time that was the biggest platform around for retail traders. We felt that there was a niche and a need for some more professional tools for independent traders, right? Now, since last year, we have started work to translate all of our Blatek indicators, which is the ecosystem that I use, into Ninja, but that's going to take time, and it's coming along, but I've had certain things happening in my life as well, which made me pretty busy. So hopefully we can push that along. But basically what I'm looking at on the other screen, what that looks like. So here's my copper chart, if you want to know. That's my 4-week volume profile that is fixed range. These are my volatility bands calculated from VWAP. I also have a very easy way to switch between the values. So right now I'm showing the value area from London. I can easily see where the London value area is from the COMEX session and from Asia. So I have my projected ranges from my concepts, which is the average session range, and also my daily ranges that turn into dots. They are dynamically calculated, so it all makes it pretty nice and automated for me. But my execution platform is Topstep. So this is why I try to drag all of the levels that I look at on the other platform in the expectation that someday we're going to have TPOs on Topstep as well. But at the moment we don't. So, however, like I said, I'm a bit old school. So I like to, I like to keep my execution platforms and my charting platform a little bit separate. You can always have a case of drawing something on the charts. Tradertainment actually does that a lot. Like you're drawing something on the charts, and then by accident you go into a limit order and you forget about it. So I never want to be in that situation. So, while I'm clicking and stuff, obviously Topstep is not like that. You actually have to do a couple of steps before you enter a trade. So that's that's a very good thing. But a lot of the other platforms, it's like, one click and you're in. Very dangerous, right? All right, let's have a look at what is going on and who we have. This morning, we have Jake saying, Jesus, you scared me to death when I forgot the window was open. Yeah, I think that's how Coach Hoop got scared as well, because I think he got woken up by one of his dogs, and then he left the TopstepTV running, and then I came on and started talking. And the thing is, Hoop and I talk a lot, so he's like, is he talking to me? Was that? Oh no, it's the London session, right? Of course. Yeah. So apologies about that, but yeah, nothing I can do there. If I startled you, didn't mean to. Okay. All right, we have Dan Trader always here first, super commendable. Now, Dan, you posted something in the VIP, so hopefully you read my message. It's okay. Those sort of liquidation days are difficult for everyone. It's a bit of a misconception that people must do great on single direction days. In my experience coaching people, single direction days are the things that kill accounts. Because let's talk about what NQ did while I'm waiting for this this lovely copper trade to do his thing. What am I typing? Christ. Mondays. No. Dee. Wake up, Dee. Okay. Massive liquidation day. This is a daily chart. I mean, look at that. It just kept going. Now, if you watched me and Hogue on Thursday, we kind of spoke about the previous day because we had this massive flush at the open, and the two of us were like, I actually asked him, does this look like the start of a liquidation move to you? And he said, yeah, it's certainly really violent. And lo and behold, the very next day we've had, test of the supply here. If you see these dojis, so we open a little bit below it. Tested the edge, the nearest edge, proximal edge of the supply, and it just went. It was like insane. So if you are somebody who didn't manage to catch this, or you are thinking, what's wrong with me? It's a big day. I should be in on that. It's not exactly true for intraday traders. So whenever you have these big liquidation days or even zombie rallies that just keep going with no pullbacks, those tend to be the most challenging days for intraday traders. Not for investors, because investors usually already have their positions and they typically already have their, options trades as well, and they can just wait, right? We, as day traders, we have two additional problems: time constraint and controlling risk on a smaller stop. Both of those are exceedingly difficult on those types of days, okay? So don't cry over spilt milk and just, going, oh my God, what have I done? Before I sort of learned to stay away from them or to just try one or two trades and then get out, whatever happens, I actually used to have my losing days on those sorts of days. Like, it would always happen. It goes into a crazy trend, and the mean reversion D kicks off, and I'm like, oh, I'm just gonna try and fade this, like a true degen, and then after a few years of trying to do that on big days, I realized that there are certain days where once it overshoots some of my average ranges, like usually it overshoots the average daily range low, right? So if it starts to go, the only way I like to catch those is to see if we can sustain below the busted average ranges, then retest that on a back test, and that tends to be the only way that I was ever able to catch anything out of it. But even so, I would never stay in for the duration of the move. I would just wait for either the flush or pump and then get out. So it would never be like, oh, D holds a trade into a liquidation for all day. It never happens that way, okay? Because the swings that they do on those sorts of days, they are ludicrously massive, right? So anything that you can catch, I would say, good on you. If you ended up break even, great. Don't be, sad that you didn't catch anything. It's fine. But there will always be people who accidentally catch those days. And I would argue that that's probably not the best choice for a trader, because then you're like, oh, I managed to catch the liquidation day. I'm the wizard. And then they start to expect that same day to happen over and over. But here's stats in regards to true liquidation days and true zombie rally days that don't have any pullbacks. They only happen 8% of all observable days when we look at, let's say, a 3-year sample size. But the thing is, I've been looking at these for years in a 3-year sample size, and for like as long as I started messing around with mechanical trading systems, right? So let's say for the last 8 years, I've retested these stats in regards to true trending days that just keep shooting up or down. They happen 8% of the time with quite some accuracy, and it stays like that, right? So I wouldn't really be obsessing over the fact that, maybe you didn't do well, or even if you blew up an account, just take it on the chin. Remember the next time, if you see something, find a way to define those days. I found them I define them by overshooting the average daily range relatively early in the session and then keeps going. Okay, so it has to overshoot, ignore, maybe retest it, and then keep going. If I see that, I stay the F away from whatever is going on. Okay, I go do something else. Maybe I'll try like one trade. If that one works, I'm like, whoa, okay, brilliant. If that one doesn't work, I might try another one. And if that one fails as well, I'm out. So 2 attempts. But usually what tends to happen is that out of the 2 attempts, I manage to catch some of it in one go. So yeah, just have some sort of a defensive strategy for these types of days, but just know that they're not easy, and it's a misconception to think that just because there's a massive day that you should have been in on it. They are account killers, so be very careful, okay? GWiz says, looking to long gold 2958.3, targeting 2970.5. I can have a look at gold just for a minute. Gold, to me, is a bit spiky right now. Like, it seems to be doing massive wicks. We talked about it, 130 ticks in a candle. Even those opening range trades would need, like, 50, 60, 70 ticks. Like it's so much risk. Right now, gold is still inside its own initial balance. I mean, surprise, surprise, it's opening above value. But yeah, I mean, I don't think the other time frame participants have stepped in yet. If I do gold, I tend to like trading gold around my 11 a.m. and then into COMEX, but I cut it off at COMEX beginning because COMEX is just like, again, insane. So let's have a look at the daily chart just to get a good... I mean, this is a range, people. This is a range now. So we have a range. Maybe if we get down to the bottom of the range, maybe at bottom quartile of the range, I might want to try and catch it long. But, you know, longing it up here, well, I tried that last week and didn't work. So I am not going to be longing it here. Very dangerous. Distribution potential, very spiky distribution, but distribution nonetheless. It keeps building volume. Point of control is at 29.43 from this little consolidation. But on the daily chart, this is no longer a trend for me. This is now establishing a range, which means we need to look at tops and bottoms. Because it's all-time highs, I would probably look at the bottom area. I'm not interested in any of this. If it doesn't offer me a clear way to short it, then I want to go with a trend, right? And just by the fact that we haven't smacked through the initial balance high, so we literally went up to it and it's still doing a trade that could be classified as a Frankfurt fake out. So what is that? Let's go down to a 30-minute chart. These levels are old, so I didn't drag out all the new levels from the chart, so that is not relevant today. So let's see. Asia high, is that Asia high? Yeah. So here's what I mean when I say Frankie fake out. This is Asia high. London opens, so here it is. Tries to go higher and then reverses. So that is a setup that I used to do in Forex quite a bit. On some of these products, there are days when it happens, other days when it doesn't happen, and it's just like a bit random and a lower frequency of occurrence. However, I have been noticing it recently more in gold. And, you know, when you see the extension of the initial balance higher, then that would pretty much invalidate the Frankie fake out. But for now, this does seem like they turned around. So next point of interest for any longs for me would be 29.52, which is overnight VWAP. I don't have anything else here. Like, unless we bounce from Asia high, which is not really a high probability trade, there is a little bit of a demand here on a 30-minute chart. So that may, if this trend is truly so strong, which I'm kind of doubting at this point because of that outlook on the daily chart, I would like to see it bounce here and extend the initial balance. Otherwise, overnight VWAP is a failed auction long. I have average session range low near the 4-week point of control around 29.46.3. That would be my second choice. And let me have a look at the options activity as well, and then we're gonna deal with the rest of the questions. So I haven't I haven't looked at options on gold today. So that'll just be a second here. A second here. Clickety click. And as if by magic. Right, so we have an HVL, so that means potential gamma flip, so 29.59.9. So let's say 29.60. If it manages to sustain above it, again, we come back to that initial balance smash higher. in order to continue the move upside. But otherwise, this HVL for now seems to be resistant. Then we have put supports as 2950 level. And then further down, not much. I mean, there's GEX2 and GEX3, which are, you know, they can be reactive. I use them more as orientation points rather than anything else. But yeah, so plenty of room up and down. But once we get up to 2970, if it starts to get up there, I'm looking at some chop because there's so many options levels there. So there's 1, 2, 3, 4, like all of them in a like 5. Not even 5. Yeah, 5, 50. So spaced out 50 ticks from each other, and that usually means chop. So right now I would be, if I was trading gold, I would be short, but it doesn't look like any of one of my setups. But at these levels, I would not be long gold, purely because of the distribution on the daily chart. No extension of the initial balance, Frankie fake out as the only option. And then if you're looking for longs, like I said, VWAP would be one. That's kind of close to that put level at 2950 as well. So if that bounces, that would be a good one. If not, we're looking at 2925 and lower. So yeah, tricky one. Gold. Tricky. All right, let's have a look at questions. For now, my copper is pretty drama-free. It's failed the auction and behaving itself. But anything can happen. But copper tends to be a bit directional. So anytime I see like a trend, unless like something obvious happens, like we accept value, we extend the initial balance into a sustained auction and accept value and shoot through the calls, you know, maybe then I would change my mind. But for now, I think we're okay. We'll see what happens to GEX5 that was reactive just before London opened. This is copper now. We're back to copper. If we manage to battle that, first target would be 450, which is also where the London average session range, where the London average session range is located. We also have a level from the options activity. They kind of project how far up or down this move can go. Now, projected 1 day minimum is 448, so it's like actually overshooting some of my London levels. And similarly, all the way up 464, so plenty of room to both sides. Nothing is decided yet. And so far, the only thing I can say is it's looking okay. So let's keep it going. Right. What Tostino says, what are the most important metrics when evaluating a prop trader for increase in capital / predictor of profitability? I've read Sortini ratio is preferred to sharp when backing a trader. So there's a number of things. When I was evaluating my traders, I was actually looking at K ratio. I think I mentioned that because I liked the calculations that kind of went into that. Sharp is more for like investments and portfolios and stuff. I never really found it particularly useful unless you're looking at like someone who will hold trades until the cows come home and they never do anything else. So maybe in that case, Sharp would be preferable. But most intraday traders are a mix between some scalping and some swing trading. You know, no one is like, oh yeah, I'm just a scalper. Hey. Or yeah, I'm just a mean reversion trader. I don't do. All of us who have been doing this for a long time, eventually you mold yourself into whatever the day wants you to do. You don't just stick to one thing. But the predictor of profitability, you know, there was a thing called Netto number. So that was kicking around a few years ago. There was a poker player called John Netto who came up with something that could be quite useful for day trading as well. You can have a discretionary approach as well. You don't actually have to look at things because, let's face it, we're not robots, we are people, and yes, these metrics are great, but sometimes with guidance you can make a decent trader or a highly average trader into an excellent trader with just something. This is what we do as coaches, right? So those of us who have come from the prop world, not like oh, look at my Lambo, but those of us who have worked in the industry and we've seen what profitability means over time, and we know how to guide people. Most of us who go into coaching, we sort of have something in our backgrounds, like away from trading, that makes us into decent coaches. Like myself, I used to be a musician, but I was actually classically trained. I was a rock and pop musician, but I was classically trained. And that meant that I had to go through the psychology of learning, methodics of teaching others, and all of that stuff. So, it's something that they try and prepare you just in case you want to be a professor, right? That's how it all works. So you have the whole psychology of learning thing. So that's my background as well. I never really fully went into teaching because I was an active session musician, but at one point I did try teaching a few people and I found it pretty easy. I was like, okay, I can pinpoint their weaknesses, I can give them tasks to work on, and then off they go and work on that. And I did the same thing in trading, right? I transferred the skills that I've used both on myself to level up my trading skills and my music skills, and I've used the same techniques to run my personal coaching service, right? So I've literally had thousands of traders that have gone through not really being very good to getting consistent payouts and managing the bankroll appropriately, even though that tends to remain a problem for many. They get to a payout, but then they still blow up accounts. So whether that's like still oversizing or whatever, it really depends on the person. But then you would work with a trader to just pinpoint exactly what is it that they're doing at that point. But predictor of profitability is time. Staring at random numbers, that's all great. But for me, it was always time. How many mistakes did you make? Because some of these measures, they will sort of punish the number for the ratio, whatever you're looking at, because you've, let's say, recovered something really quickly. And then some of these numbers don't like that. They kind of prefer to have, when you've got into a drawdown, then the longer that you take to get out of a drawdown means that you're a safer trader. I actually disagree with that, because when you have somebody who has a positive risk reward, their drawdowns are actually over and done with pretty quickly, because the numbers, once they sort themselves out, or once the market state switches back to something more favorable for their system, they actually get out of a drawdown pretty quickly. So, there are definitely a discretionary points of view when you're figuring out whether a trader should be backed or not. And it's not just down to looking at a bunch of data and then going, oh yeah, that's great. Because, when you look at data, that's great for mechanical trading systems, not for manual traders. Because manual traders change a lot, right? We're not robots. We try to be. We try to trade as mechanically as possible. But obviously life happens, you can malfunction, you can be sick, you can have a flu, you can have a headache, you can have a dog throwing up in the corner. That's usually my big thing. You're like zoomed in, everything, and somebody's barking, other person is being sick, and you're like, what's going on? And then you have to go and help them, right? So do you kill a trade? So even if you kill a trade, that still introduces variability into that. And then if you reopen a trade, is it going to be at the worst price? So it's like it's still an opportunity, but now the location is complete nonsense. Things like that is very, you get a lot of variability with manual traders. And that's why you have to have a discretion as well to see, how do they perform over time? All of the mistakes, all of the emotional baggage that we all have, how does that carry over into 6 months, into a year. You know, like when I was backing my traders, I was watching them for 6 months, right? I wasn't doing combines, I wasn't charging for it or anything. I just wanted them to prove over a 6-month period that they had profitability. Now, another reason why I put up courses up there is because for 2 years I just kept getting scratch traders or outright losers. So they would trade for 6 months and it would be like just loss, 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 loss. Or it would just be like scratch. Up, down, up, down, up, down, up, down, and nothing. So over time, over a 6 months period, there was nothing there. And then I just thought to myself, let me just teach people, because this is going to be much quicker than me waiting to find people. Like obviously Topstep found some people, but that's like, we're talking probably like tens of thousands of traders, like, you know, across the world as well, not just in the UK, which is what I was trying to do. But yeah, so many ways to look at the trader's profitability, but nearly every single one should be time. Okay, if they can't hold on to their returns and gains over time, there's just no trading there, right? It shouldn't be backed. They shouldn't be backed. Or they need to prove themselves first, right? This is why combines are so great. And this is also why the longer you stay in combines and the longer you stay in XFAs, the risk managers actually have a better way to evaluate you, right? If you just stay in for like 4 days and you make 50K, yes, they will move you, but then we've seen what happens. They don't actually like moving people. Like, mark my words, they're going to be changing that 50K, and it's not going to be like any set amount. It's probably going to be just like, oh, well, whenever we decide, that's going to be it. Because, you know, we've seen people who have literally just maxed out XFAs through some interesting trading practices and sizing up a lot to get a massive account. So, you know, it's that would be a risk for the firm, where it's like you're still sizing up crazily. It's like, stop doing that. You know. All right, let's have a look at Din's Revolution. Hi, ma'am. Oh, God, don't call me ma'am. It's like my mother. Can I ask, please, what time does the London session open? PT time. Pacific time? Okay, I'm going to have to use Savvy time zone for that. Savvy time. So... is it, it's PST now? Is it PST or PDT? Probably PST. So the London session opens at midnight Pacific time. Okay? Hopefully that helps. Thoughts on gold, we've done that already. What's the indicator for the options levels? This is not an indicator, but there is one for TradingView, Bookmap, Ninja, MetaTrader, by MentorQ. So MentorQ is the company that does it. This is the one that all of us use. So MentorQ. They have a YouTube channel, they have a whole bunch of stuff, they have webinars, they have... is London CBOE? No, London is London Stock Exchange, and then there's Eurex, which is a Frankfurt exchange, also a different data feed. So you have London Stock Exchange with FTSE, and actually one of my companies was registered there because we were trading company capital, and we still do. So you have to register on the London Stock Exchange, bizarrely, even if you're just an equivalent of an LLC. If you're going to trade as a corporate entity, you have to be registered. It's like, you know, not in any kind of, investment capacity, but just that, oh yeah, you are a company that trades on LSE. So CBOE has nothing to do with LSE. Like I said, FTSE is something that trades on London Stock Exchange, as is DAX, my favorite product to trade for this summer day, which we still don't have on Topstep. And perfect time to push some Eurex You're exposed to some new people. Guys, please upvote this if you want Eurex and DAX, because DAX is some of the smoothest products out there. It is just incredible. Like now in the last sort of couple of months, it's been moving really well for both sessions. So it doesn't matter whether you trade it during London or during New York, it still moves really nicely. And I actually did a beautiful short DAX VWAP trade from the London value low on Friday. I was actually talking to Hoop, and that set up really late in the day. And I said, oh, this looks juicy. So yeah, I think I made 2R, so there was like 70 ticks out of that move. Nothing crazy. It was a lot less crazy than NQ. NQ was wagging around like a nutter, and DAX was just like came up to VWAP and London low, then chilled a little bit, then turned around and then started dropping. It was just like perfect drama-free trade. It was like beautiful. Okay, GX5 on copper is causing a little bit of a bounciness. Bouncy. Is it going to hold or not? That is a question that I ask myself whenever we're hitting problematic levels. So it comes up to a level, we hit it. Usually there's a bit of a bounce anyways. That's expected. So on the first try, here we have some demand. So this, if this breaks down, then we're all good. But there is a chance of strength inside initial balance, in which case this is going to turn around and go into another sustained auction higher. But like I said, I have a short bias purely because of the way the day looks. Now, whether we're going to have a big drop or not, you know, I'm not looking for necessarily a massive drop, because if we make a neutral day type, that's going to increase the possibility of this pinging back to the middle. So if I get anywhere below the initial balance, if it gives me a chance, I'm probably going to take profits way ahead of the calls. If it just drops like a stone, obviously I'm going to let it do that. But there's still a chance of it kind of not having a big day, just kind of being a very quiet day that just moves in a range. What is going on here? So 2 shots. The Pacific time is 2 hours behind Central time. Yeah. So if Central opens at 2 a.m., London opens at 2 a.m. Central, not when I start this, because I want to see an extension of the initial balance before we get into trades, which is why I start them later, so that we can then extrapolate that if Pacific time is 2 hours behind, that is still midnight, so I'm still correct. Yeah. What market opens 1 hour after UK? None. But that is the time when the other time frame participants step in, right? That is the end of the initial balance, and after 2 hours post the first hour of London, so 3 hours into London, you get the overlap. That is what you're seeing, right? Especially for these products, because these are not products that are London specific or Eurex specific. They are COMEX and New York Stock Exchange specific. So what happens is that they're very quiet over out of hours, right? Because this is technically an out of hours session. And then as we get closer to the regular trading hours, things start kicking up as Americans start waking up, right? So this is why you will see an increase in interest 2-3 hours into London. But 1 hour after, that's nothing more than the other time frame participants stepping in and trading these markets out of hours with a lot less volume. However, the price action can be a lot smoother then as well. So it doesn't have to be a bad thing, especially if you have a product like NQ that is completely bonkers for the main hours, and some people actually prefer to trade it out of hours because it's actually kind of digestible, right? Right. Cody Campbell says, maybe you could explain the correlation from viewing options, how that affects the bias in a trade. So options levels are nothing more than just another orientation point. They are not the be-all and end-all. They can be, like, let's say, the only time I would look at an options level as a possible turning point is if we had an intraday extended move up to, let's say, call resistance, right? So let's say gold, it kind of rises up and goes up and goes up and goes up and hits the 3K. I will try, and there's like some calls up there, I will definitely try and short that, right? Because you've had such an extended move, you would expect some profit taking to be happening at the major call resistance level, because market makers simply have to adjust their inventory at that point. This is partly what Hoag's weekly kickoff levels comprise as well. They do comprise support and resistance, but also some options activity too. But yeah, so for me, the way I look at them is just as another orientation point and to see how well we're doing. So for example, today we opened below London value on copper. We had these put areas that were broken. So upon a test, I expected it to go short again, and it did. That's exactly what my trade was. And then my next orientation point has nothing to do with the options. It's VWAP and the initial balance. We had a failed auction happening. Now I have another options level here at the point of the London initial balance demand. It's GX5. It's not a particularly strong level, but if nothing else is happening, they can be reversal points as well. But because we already had a failed auction and we have a short bias from the larger time frames and the profiles, so we're short inventory overnight, that tends to mean that we are going to experience a neutral day at the very least. So that's kind of how I use them. It's not the only way to use them. You can use the HVLs as a level where once you go through it, it kicks up a big momentum trade. Some people use the HVLs for that as well. I've noticed on some of my instruments that are less crazy, that doesn't quite work because the HVLs are typically connected to puts and calls. They're never like singular, just levels that are sitting there. But they do, they can, let's say, flip from a negative gamma environment to a positive gamma environment, and suddenly you go from, or vice versa, positive gamma into negative gamma. So it's like you have a quiet day and then everything goes crazy. What's that? Well, there was some shift in gamma, right? And that's why everything starts going nuts. HVL levels are there to signify where those points might happen. But, in some of my products, they tend to be directional and they don't tend to wag around too much. Once they decide on the direction, typically that direction stays in force for most of the day. And yes, you can have range-bound days. We had, I think we had Friday that was pretty range-bound. Or one of the days, like Thursday, it was very kind of directionless. And in that case, you either want to stay away from it or maybe shift to range-bound strategies. So, it depends. In that case, the options activity levels might help if they're comprised of, if they are located at the edges, but not really in the middles, because they won't serve much purpose. Because it's a quieter day. So let's say that this ends up being a range-bound day. Well, if I had some calls up here and some puts there, well, maybe that can be an additional helper. But again, million ways to peel an onion, as we like to say here. That's how I use it, Now, Paul H. had a pretty good question here. Morning, Paul. Always good to see you. What would you say are the common traits for profitable traders? I would say stubbornness. Bizarrely, right? It wouldn't be anything else. It would be just not willing to quit. Just kind of like, F you, I'm going to do this. Nothing will stop me. That tends to be the common trait of profitable traders. This is something very difficult, right? Being a profitable trader, like being a trader in general, it's scary. It's out of the norm. People see it as gambling, so you have to battle all of the people around you. I was sort of in a good environment where, for the most part, my husband was in banking, so he knows that it's not gambling. He knows it's all database, so he wasn't against it. But my mother, who didn't know much about it, And, the rest of my family, who only knew me as a musician, who was actually pretty terrible at maths, but bizarrely very good at arithmetic. I don't know why, but, hated maths in general. However, pure numbers are interesting to me. I don't like doing equations. I hated doing equations with two unknowns, where they give you a textual example. It's like, if this is moving at that, I'm just like, kill me now. Like, KMN. I'm done. If you've ever watched Big Bang Theory, yeah, you'll know the reference for KMN. So that was me with math and most things. But then, you apply certain things to physics. That was actually pretty interesting to me as well. So I was a pretty decent student. I was like a B student in physics, but maths, because of geometry and because of textual assignments, I was just like, ugh. However, one common trait that I've seen throughout my career as a trader is sheer stubbornness. You will not give up no matter what the market throws at you, right? That is how you become consistently profitable. You don't become profitable by moaning about things. You don't become profitable by sitting in a corner and crying over your fate. And no matter how frustrating it gets, once you get to a certain point, you realize the beauty, complexity, and pure intrigue that the markets represent. They almost represent our collective psyche, right? And for me, playing detective every day has absolutely nothing to do with money at this point. I just like the puzzle. Every single day I have a new puzzle to solve. And if I don't solve it, I'm like, why didn't I solve it? Could I have seen it somehow? So it's just that, stubbornness, being like a dog with a bone, with resource guarding problems. That's what you want to be. That is the only common trait that I've seen across the board in anyone who stuck around long enough to become a futures trader and makes money out of it. Or any trader, really. It doesn't have to be futures. I Am Legacy says, that's wild. If you're profitable sizing up, why would you be punished? No, profitable sizing up after being in I didn't say sizing up, first of all. I said when you're evaluating a trader, some of the metrics are punishing the quick returns that you get due to a positive risk reward, not due to sizing up. If you're sizing up some of these numbers in order to cover your loss, a lot of these, actually I think all of them, will massively penalize you. All of them don't like seeing a loss, because that's martingale, right? So you do a loss, then you size up, and then you kind of bail yourself out. That is a recipe for blowing up, okay? So it's not, oh, you get punished for sizing up. Oh, yes, you do. But the problem that I had with certain metrics is that look at like the overall portfolio performance, is that they will also punish the quick returns that even without sizing up, and purely on the account of high risk reward. So that's the thing that I didn't like about it. That's why I don't like only using the numbers to evaluate people. Still no DAX available. Still no DAX available. I know, right? We've been left alone and lonely. The trade markets, they don't move that much in the morning. But yeah. We'll live, guys. DAX will arrive someday. I remain hopeful. I think. Yeah, I know. Bruno has a session. Like the French, yeah. Because it started going a bit wrong and I just rolled with it. So, yeah. It wasn't an intentional French accent. It was just, my mouth malfunctioned in the morning. I think I've woken up now, so we should be okay. You will notice I like to change my accents quite a bit. Not that I like to. I tend to take on people's accents. And I've been listening to Jerome recently quite a bit. And I think it just kind of somewhere in the back of my mind, it rolls on me. The other day, I tried to maintain a pretty neutral English accent. But then last night, I actually said to my husband, oh, I thought you were Keto. It's like, keto, like D be trying to be all street in it. And he just looked at me and burst out laughing, and I was like, sorry, I don't know where that came from. And I think I know, because yesterday we went to look at some mattresses for the new house. So the guy in the shop was very kind of Cockney, and he was like not pronouncing his T's and all of that, and I came home with that in my mind. So I just said keto. I'm like, what am I doing? And I think that's the musician in me, right? I just take on people's accents, whoever's around me. I also noticed that I started taking on phrases from the guys on the main broadcast. So I say things like demand and like, I don't know, I caught myself saying some words that I don't normally say. So I'm like, okay, interesting. Yeah. So let's carry on. Anyway, where were we? About the psychological topic. Ooh, love that. How do you maintain neutral behavior about market movements? How do you keep fight or flight from not kicking up? I like to make my traders do weights. So it's not to do with sitting here and pushing your adrenaline into your P&L, whatever that may be, usually negative though. I like to have them step away and then go do some weights and then come back when their brain is at in a more healthy state. Emotional awareness is a big part of my coaching. I think Dan Trader can attest to that. I don't think that looking for solutions for fight or flight is going to be levels, okay? Anyone can learn bloody levels. In its core, trading is like, it will either go up, down, or sideways, right? There is no fourth option. That is it. So if you are getting frustrated because of the market movements, that means that you haven't maybe truly mastered the confidence of the levels and the art of letting go. Okay, when I lose, and I do lose, I lose like 60% of the time, okay, easily, but I maintain a high risk reward. Now, what am I supposed to do? Get super upset every time I lose, and I know that I'm going to lose 60%? I don't care. I really don't. Like at this point, I lose, I win, I say whatever. To me, it's either, a buffer or an expense. I don't look at it as anything that will kick up my fight or flight response. I don't get angry. I don't get pissed off with the market because it's not doing what I wanted to do. That's a little bit of a childhood mentality, isn't it? It's not doing what I wanted to do. It's like, it's not going to do what you want it to do, okay? It doesn't give a shit what you want to do or what you want it to do, right? So we have to accept that, and we have to just chill, right? So market moves, you don't have to be in. If it's not a part of your plan, you don't have to be in. And if it's already on the way, you've definitely missed the boat. But that's okay, because there's another boat right behind it, right? Especially in something like NQ. Maybe not like copper and stuff, because we do end early, so you don't get like endless amount of movement throughout the whole 8 hours of the session, because it closes early. It closes at 12:05 p.m. So that's like 6 p.m. my time, and then you have another 3 hours before the electronic close. However, most of the time, copper will be just completely dead. So, you have a few hours in the day to make it do what you want it to do, and that's done. And if you don't recognize the opportunity, a lot of the times copper is very directional, and then you had the opportunity for a low-risk trade earlier, now it's gone. You just have to let it go, okay? And this is where weightlifting and meditation, yoga nidra, but mainly just going and lifting some heavy shit so that you don't be annoyed, that you're not annoyed, so that you're not literally letting the adrenaline run your trading decisions. And that's what the main problem is, right? When we get the fight or flight response, we get the glycogen reserves that from our muscles that are used to kick off the fight or flight, and then fuels the adrenaline that is the next chemical reaction in our bodies that makes us feel stuff, that makes us have the pounding heart, cold sweat, tunnel vision, all of the stuff that is literally happening to you as if you're about to fight someone or run because you see a lion, it's about to attack you, and you're like, oh no, I'm definitely not fighting that. Or a bear, right? A bear comes at you. You're not going to think, yeah, man, let's go. You're just going to go, oh shit, right? And run. So that's all a part of the fight or flight response that we also experience in the markets. Why? Because a stupid primal brain cannot tell the difference, because a bit of lost money and a bear attack looks at it as exactly the same thing. So knowing that, you can just kind of go and lift weights anytime you feel emotional. Now, the reason why women are better at this is because we're more in tune with our emotions, right? We are not taught as children to hide our emotions, whereas men, I think nowadays that's not so much of a problem with like Gen Z and maybe even millennials, although millennials are a bit of a mix of Gen X, which is what I am, and the kind of a more kinder way of dealing with children. But as a result, some of the women are still more emotional and more in tune with their emotions. I wouldn't say more emotional, more in tune with the emotions, because from my experience, men are actually more emotional, but they just hide it. They're very, very, very good at hiding things. Because why? The society teaches you that. But what happens to you then in trading? You don't want to admit that you're going through a myriad of emotions, and you're like, oh, okay, now what? Men are generally less equipped. I wouldn't say ill-equipped because, you're, again, not robots. But I would say that you're less equipped with how to navigate emotions rather than just swallowing them and pretending they're not there. And this is where the emotional intelligence of women really starts to shine. And anyone who's been in this industry says that working with women traders is always very different, and they're always smashing it, because we are like okay with feeling things, but we're also okay with emotional intelligence and admitting that we're wrong, and that, we have more patience because of that. It's like, it's okay to be wrong. The whole society, before women got rights and stuff, they were telling women as a whole, womankind, that we're not good enough, that we shouldn't go to school, that we shouldn't do this, do that. That breeds an emotional identity of a certain kind that we've had to fight. Even when I was a kid, like I come from Belgrade, Yugoslavia, and over there having a male child was like, wow, well done, mate. It was like celebrated. And my dad had 2 girls. And one of the biggest questions that he was getting in interviews, do you regret not having a boy, not having a son and an heir to carry on your... And he was like, no, I love my girls. Like, what the hell are you talking about? And my dad comes from a more modern side of things. So he definitely wasn't your typical sort of Serbian dude. He was well-traveled, he lived abroad a lot, and he had views that were pretty unorthodox for that time back then. So, anyone else is like, having 2 girls. Like, it was so bad. Like, if you went back about 50, 60 years, people would actually be killing female children if it was like the 2nd or 3rd female child, because they would be like, oh yeah, let's just drown the bitch and get another one. It was horrible, right? And, all of that, being a woman, growing up with that kind of history and everything, it definitely creates a different thing. Like, people nowadays think it's sexist because it's like, oh yeah, we now have gender neutral people. It's great, awesome, expression, self-expression, be whatever you want to be. But at the core of it, there is a cultural aspect to controlling your emotions and what you were brought up as. So just don't completely forego that, because it is so important in trading. So important. But weightlifting for both all genders, like all, whatever you want to call yourself, weightlifting is key to emotional control. Why? Very simple biological process. You start feeling emotions, that's your limbic system activating. you go and lift weights instead of getting all of that emotion into your P&L. You put it into a weightlifting session, okay? And it has to be a hard weightlifting session. If you're not able to do that, then obviously you're at a disadvantage. If you have something, a problem with your back or, a health issue of any sort, I know there's many people with that these days, that becomes a problem. But then look at Yoga Nidra or something that completely moves you away from the charts and disengages your mind and body from this. For about an hour, then come back to it. It's more difficult, but it's still possible. So there are ways around it. There are ways to do things with a little bit of critical thinking, as always. But emotional control always has to come from you doing something away from the charts, not sitting there and just letting the markets assault you. What RR are you looking at for a copper trade? Well, at the very least 2 hours. So at the very least 70 ticks. If I can maybe get down to this 450, that would be very nice. So what would that be? That would be about 90 ticks, and I would be very, very happy with that. I wouldn't ask for a full London session low. It might get there, but 90 ticks is like, that's over 2 hours. That's basically 2.7 hours, so almost 3. Whether we're going to get there today, I don't know. But I do have another way of controlling this. So it's going to be a time stop at COMEX start. So if this does nothing until my 1:30 p.m., which is in 4 hours? 3 hours. Sorry, my math is not on point today. So in 3 hours' time, if this does nothing and it doesn't make the move that I'm looking for, I will just kill it on the account of a time stop. So it's either time or price, the way I trade. What's my take on CL to do? CL to do? Sorry, people. I need more caffeine. Caffeine. What's my take on CL today? Yes, that is what I want to be reading. Haven't looked at CL today. I'll be honest, it hasn't been on my radar. Last week I was doing platinum all week. Crude oil. Still looks short on the weekly. I think it still has room down on the daily. But on a 4-hour chart overnight, it's consolidated and it's trying to pop back up the 9 EMA on a 4-hour chart. Holding above the initial balance for the London session. Now, looking at the Friday value from actual NYMEX, it's kind of sitting inside it right now. So if that doesn't change, and if we open inside value, this could be a bit of a boring day today. And I mean, Friday was a pretty big day for crude oil. So yeah, I wouldn't expect too much today. Usually crude oil either retraces the full move or just has a really dull day after a big day. Are you still coaching or have you retired? No, I'm still coaching actually. We have the VIP group at Topstep and I still have my personal coaching clients. I have reduced my personal coaching purely because I had some chronic illness issues over the last 3 years, but it's still going. You know, I'm not taking on 4 people a month anymore like I used to, but I am taking on about 7 a year. So that's a very, very low amount of people. But yeah, I do coaching. However, my coaching has to be for a specific type of a trader. I don't take everyone because I feel that if we're going to spend like 6 months together, and usually people go for 6 months, some people stay around for 2-3 years, okay? But that's usually those who want accountability and they already have accounts with prop firms and they just want me to be there. But for those who want to learn from scratch, they have to be of a particular professional background before I take you on. Because if you don't already have some transferable skills, like either from being a professional athlete, professional musician, a chef, engineer. Engineers are really good, usually and very quick to put the puzzle pieces together. Doctors, big memory, massive memory, they remember everything. And also generally pretty good at numbers and tracking things, being analytical. If you don't have all of that, I'm not going to be there for the next 5-10 years for you to develop that. So I feel that it would be disingenuous for me to accept somebody from a more regular background and then to just see them waste their money away. I'm not in the business of taking anyone's money unless I'm sure that I can help them within a 6-month period, okay? Perhaps a year if they are, if something happens and they can't quite commit to it. It happens a lot. People start coaching and then they have a shift in their private life and they're like, oh, actually, can I pause? So we're very flexible with that. However, usually after a couple of years, I'm just like, I'm done. I've taught you everything that I can teach you, and this is it. But most people come to me after already having been trading for about 3 years, and then in those 6 months, we just correct certain aspects of what they weren't doing. Usually they're not journaling, they're not writing a plan, they don't know how to write a plan. So I start being the accountability coach. Now in the VIP coaching, it is 50 people, it is group coaching. So it is different because I'm not going, I'm not taking apart intraday plans for every single person. We're kind of looking at the overall stats and how we can make them all better. But in general, I am using some similar techniques that have worked really well for my own personal coaching clients. So yeah, so I'm definitely not retired. I've just slowed down a little bit whilst I was dealing with health issues. My health issues are no longer that bad, so I have more good days than bad. But there are still times when I can't, I generally can't do things that I used to do, let's put it that way. Like I used to work 16 hours a day, easy, right? I was one of those. And now I'm not able to do that. So I have to be very, very careful how I manage my energy. But yeah, far from retired, man. Like I'm hoping to still have all of my businesses for at least another 20 years. So I ain't going nowhere. When do you start trailing your copper trade stop loss? Never. I don't trail my stops for swing trades. I trail my stops maybe for intraday trades that won't last very long. And I expect a super quick move. Trailing your stops on a swing trade is a sure way to limit your upside. I can tell you that. It's the one thing that you do with messing around with swing stops is to cut off all profit potential. So I don't do that. I expect that there's going to be some ebb and flow, but at the same time, I have some orientation points. So, yes, I have a 35 tick stop, but if this goes and takes out the high of 455.60, that will be my invalidation point. But I'm not going to move my stop there because sometimes they can do a liquidity grab and come back down because we have the London value low just above it. So me moving my stop there and not allowing the room for my statistically viable stop loss that I derived from my mechanical trading systems. So basically we run mechanical trading systems, and one of the things that we do there is we use machine learning to see which combination of a stop loss size without messing with it and which combination of a target would be reached most frequently, right? So let's say you use a 20 tick stop and a 20 tick profit target. On copper, you might get the numbers where, 50%, that might work. But the upside, the gain, is not that much because you're only looking at 1-to-1. What I prefer to do is to look at those two numbers kind of individually and then to figure out as a manual trader which one I should use. So back in the day, if I go back like 8 years, 4R multiples on a 35 tick stop was what you can expect from crude oil. So 4R, 35 ticks stop. These days, it's more like 17 ticks on crude oil and 35 ticks for a stop, for a profit target. That would be like something that gets reached the most frequently. On copper though, 35 ticks and about 100 ticks is something that occurs very frequently. So on some of these setups that I do. So I do use statistics to run this, and don't forget that a lot of my setups, even if they're on a new product, I've done them a million times, and when I start on a new product, I run my statistical algorithms on them first to see what numbers we're looking at. So I very quickly gain an understanding of how that market can move. And then obviously I have my eyes as well. I know that copper is pretty directional because we've tried going back the other way, and it almost never works. Sometimes it works after 9 a.m. Central, so in that sort of post-NY cut period, and in the run-up to the euro close. But in general, it's a directional trade. You know, copper, once it decides on the direction, it just goes. And this is why a slightly larger target of 100, 126 is okay to shoot for, because if you find yourself in a directional day, it will give you an opportunity to take the majority of that move and probably even overshoots, right? So yeah, you have to take in, you know, a bit of the behavior of the product as well, rather than applying a complete systematic framework to it that I used on crude oil, because they are different products, obviously. But I do have a systematic framework that I start from, so that makes everything a lot easier for me, right? That's why I can change products, change trades and everything, so because I have that template, so to speak. But yeah, I don't trail my swing stops. No. My stop is where it should be. I can cut this in half, like that's another way to control your trades much better without messing with your stops. If it gets to 70 ticks, I might take half of it off and then consider taking all of it off. I don't have to chase 90 ticks, but at that point, you effectively, you know, whenever you start moving stops, I never like that because you're breaking the structure. So unless you can justify it with a structure, why you should be moving your stop to break even. Like right now, what? I'm moving it below the previous high. Is that clever? No, it's like it's a nonsense level. There's nothing up there. And you're just asking to be stopped out. You're literally just asking for it. Because you know that there are stops up here, and there's probably liquidity up there as well. And it's like, really? You know, trailing stops, yes, is an art, but there is a bit of science to it as well. And one of it is, will you be breaking any structure if you put your stop to break even? And here, yeah, I mean, this is not any kind of a high. Like, this is a 100-tick chart. I don't have any other reference apart from this high and the London value low. So it's like, until we create another wiggle, so it goes down, then up, then creates another high, maybe you can consider moving your stop there then. But I'm planning for this trade to last me for 3-4 hours, 5 hours, right? Why would I be moving stops? Like, it's a swing trade with a stop that's there for a reason. Just let it go, breathe, accept the risk, yeah? Now, if you're on NQ, that's a different thing, because NQ is batshit crazy, and it can just whip around, and you have to protect yourself during the New York hours, because it's a different market, different product. The trading codex says, I hear you, but if I closed out your trade right now, would you get in right away? No. Why would I? If not, your RR has evolved and now you're risking 60 ticks. Yeah, well, exactly. This is what I'm talking about, the numbers. So if you close out, like, let's say this, you move your stop, you move your trail, and you're like, you're going to close it now. And then what? You want to get back in because you're seeing it bleed even further. So now you can go in, but you still have to use the stop from up here. Like maybe a little bit lower, but I still wouldn't because of the London value low that can get smacked. So you still have to use this humongous stop. So now you're looking at a negative risk-reward trade purely from a strategy point. Where are the calls? So they're down at 450, so that's your target one. And where's your stop? Well, still up here. Is that enough space for your trade to work out with a positive R? No. Now it's a negative R. So it changes the whole thing. It changes the whole outlook and the diagnosis of the chart, right? So this is exactly the things that people don't think about, that sit down and they click buttons. It's like, oh, I'm just going to go down to here, just going to do. Yeah, but where's your stop? And then they put silly little stops in the middle of nowhere that make no sense. And they're like, I got stopped out. It's the market's fault. It's like, no, it's your fault, actually, because your stop was in a nonsense place. Placement of the stop was terrible. You didn't give it time to breathe. And you were aiming for a negative risk reward. It's like, anything else you want to add to that to make your trading less enjoyable, you know? So I like to go for positive R. I like to go for stress-free trades. They can run me for hours so I can yap at you like I do here, teaching you things. And that I can, go walk my dogs without being super scared that everything's going to be, Look, if I'm trading ES and it's a scalp, or even if I'm trading IQ, it's a scalp, it's going to be a hit and run trade. I'm not going to hold an NQ trade for 3 hours. I can tell you now, right? I go in, get out, and that's it. That's how NQ should be traded, because it's crazy. If you're not going to trade it like that, and if you're looking for some swing trades, it has to be a very small amount of cash. So one micro, and a very big stop loss, at least spanning 2 30-minute candles during the New York period. So that's the 2 ATR that Coach Paul talks about. So what does that mean? It means that you're going to be using, well, let's see, let's measure. Let's go NQ on a 30-minute chart. What sort of ATR we have? We have 35 points. So 2 times 35 is 70, and times 4 for number of ticks is 280 ticks for 2 times ATR. Now, how much is that on a micro? On 1 micro, okay, that's $140, okay? Just on 1 micro to try and run a swing trade on NQ, okay? So you might get it, you might get 2R, but this is the only way to desensitize your entire position to NQ intraday nonsense, right? It's not that it's impossible. It's possible, but you just need to use bigger stops. And it's got, it's got juice. Like it still moves 1,100 ticks per day. That's less than 1,500 than it used to, even with including Friday, with that big move. It still has over 1,000 ticks. So if you're using a 280 tick stop, which is, not something I would do intraday, I would look for more zoomed in opportunities and then more hit and run type trades. But if you are using 280 ticks, just purely statistically, if you have 1,100 to work with and you're using 280, you're still looking at almost 4R availability. 1R for your should be reserved for your stop. So what's left? 2.9R. So you literally have 3R space in the entire average daily range in order to find your trade. Am I making sense to you guys, or is this going over your head? Because this is just like basic system design for me, but I don't know whether I'm, talking Chinese here. Yeah, you've got to use protection to trade NQ. You need condoms. Yeah. Yeah, do not trade without protection. Definitely. Grant says, those of us trading the combines cannot trade the way you, Dakota, and Hogue. Your current trade was in profit 900. I cannot afford to have that go against me. Why do you think it's going to go against you? I mean, if you trade NQ, I can understand, but if you're trading copper, that's kind of unlikely, because, like I said, copper is a directional trade. This is why people... Okay, so let's talk about personality of your products for a second. Do you see copper wagging up and down by about 50 points like NQ? No? Why do you think that is? Because I'm making it do it? No, it's because that's how copper is. If I tried to do the same thing on NQ, I would get eaten up alive. It would be wagging up on two NQs. They're like having two coppers. It would be wagging about 3K up down. Like I would blow up within 3.5 seconds. Okay? So on NQ, on the same combine, 150K, I would not do more than like 5 micros, and that would be an aggressive stance for me. 5 micros. But because I know that my copper is smooth, it's directional. Yes, it can wag, but most of it shoots up. Would be maybe about 30 ticks, and that's considered a whipsaw. And then it just slowly bleeds towards your target. Now, DAX is the same way. DAX to the upside, it just bleeds upside slowly. It's just like, keeps pushing, without too much drama, right? But take in the product that you're trading. GC, I can't do this on GC now either. Gold. Crazy, right? 30-minute candles. One 30-minute candle is like 180 ticks or something ridiculous. And we didn't have a release. That's just like, everyday thing. So, personality of the product is so important. Something like platinum, also pretty directional, but you have to pick and choose your days when you're trading it. You can't just, decide you're going to go in if there's no directional move. But look at this. Today it is directional, right? I was stalking this short from last week, and I was in on it 2-3 times. So I took enough out of it. So I'm like, okay, fair enough. I'm going to leave it because I'm not sure I can read it properly anymore. But look at it. This is pretty directional. All of these candles, they're usually no bigger than about 20-30 ticks. And is it a whipsaw? Is it going whipping through VWAP and then back down like crazy? No. It touches VWAP, goes down, touches VWAP, goes down, keeps going down, it's a directional trade. So I can understand why you would make that comment. I can. That you can't trade like that because you can't afford 950. But you're trading your P&L. So you're oversizing if you're making that in one trade, okay? And you're doing that on NQ. I would never do that on NQ. I'm doing it on copper. And you're effectively just focusing on the money. You're not focusing on what the chart is telling you. You're focusing on, oh my God, I can't give back 950. I can't give back. Why can't you give back? We don't have an intraday trading stop in here. That's not us. It's the end of day trading stop. Why can't you let it go back to break even and then another swing down? Give it room to breathe. You're not losing anything. This is not, some other firms that have the intraday trail. So where is the fear? Like, I don't get it. What are you afraid of? That's what you need to figure out for yourself, not for me. Like, I'm just a on-air personality on Topstep. But that is what you need to figure out with yourself. Why, in the lack of an intraday trading drawdown, you're making statements like, but I cannot trade like you, Hogan, Dakota, because I cannot afford to let it go at 950 against me. You actually can at Topstep, as long as it doesn't let you stop. There's nothing to prevent you from going 950 and then going back to 0 and then again 950 and then some. That's what we're planning here, right? So even if it starts to wag around, you need to have that ebb and flow. You need to allow for it. Then once the structure changes, maybe you can consider moving your stops, but not until then. Hopefully that makes sense. Grant says, I thought it was intraday. It is intraday. The drawdown, trailing drawdown. No, it's end of day. We're one of the few companies, and the reason why I'm here with Topstep, one of the few companies that doesn't have nonsense intraday trail, right? It's not fair. It penalizes the trader's profits. It's like, what is that all about? You're in profit, or now you're not, Intraday trail is only for some other firms, right? Topstep doesn't have intraday trailing. It calculates at the end of the day. So does that change your mind now? Does it make you more relaxed about the fact that you don't have to worry if it goes back on you? Just relax. It's a pretty, like Topstep's rules. I know that some people are like, oh, it's really difficult. But Topstep rules are really, really favorable, guys. And end of day drawdown is one of them. I also had somebody saying, oh, we need to pass within 10 days. Because back then it was like minimum trading days, 10. And they read that as maximum trading days. And I'm like, minimum, not maximum. Read. And then they were like resetting. Like I had this one guy that got to like almost the final target. It was like 8,700 or something. And then he reset the combine the next day because he thought that the reset is going to happen anyway, and then he's going to lose it. And I was like, no. Marcus says, I can hold platinum and HG overnight on Topstep. Not into the end of electronic trading. So for that 1 hour, no. But after the maintenance period, when the markets reopen at 11 p.m. my time, which is 5 p.m. Central, I think, you can run it all the way from Asia, London, through New York. So you can run it for 23 hours a day. Okay? 23 hours. That's more than enough to capture these sorts of moves on copper, platinum, You can hold anything overnight as long as you don't hold things into the electronic close. And even if you do, they'll liquidate your positions automatically without failing you. So it's a soft breach. They just close everybody's positions around. And I actually use that quite a bit because I expect the liquidator to get me at the end of the day. So I will frequently run my swing trades if I've held them through, let's say I started them later. So let's say I started in Euro close. I will let it happen all the way into the close because some of the more directional moves, they kind of keep bleeding and I want to stay under them. I will just leave. I will do other things. I won't watch it. And at the end, I know that the auto liquidator is going to close out my positions. So, yeah. Dee, show me indicators, please. I think I did already. Could have a look at DAX, actually. So what's DAX doing today? We have a big possible outlier day again. So we are above value. Now my trade was this one. Look at that. So hit the London value. If I go back, there it is. So it hit it, touched VWAP, and just went. So I took it here. It was beautiful. Could have held it to 3R for the average session range low as well, but I didn't. What is happening right now? Well, it's a little unclear for me. These are my indicators. So average daily range was exhausted very early during Asia. So they just smacked it upside, haven't been able to go above it. This VWAP may bring weakness. What I don't like about DAX today is this 15-minute candle is 87 ticks long. This tells me we're going to have maybe another liquidation day. So guys and girls, be careful. Liquidation days usually start off like this. I don't know whether the same thing is happening in equities on the US side, but DAX is looking a little bit liquidaty to me with the way things are looking. Massive candles are unusual on DAX. And one thing that we can have is that's London. So it's London Friday. There we go. So we've already accepted the value, but we're kind of wagging around it in a very exaggerated manner. But if we get weakness at VWAP, this could be another big run move down. So I'm probably going to be trying to get in on some of that, maybe as a scalp, just kind of see money, take money. So this is the time of day when I start looking at DAX. So I'm going to wish you all happy week, happy Monday. And maybe answer one more question. Program FX. I have two 50K funded accounts. One reached 4.5K, the other one 3K. When should I withdraw? I would say the way I like to do things. So I first like to have double the amount of drawdown in there. And then I personally only do about 20 to 30% of whatever is in there in the beginning until the account is built up. And then you can kind of manage that a little bit better. I never take 50% of profits because I think that it gets you into a position where you don't have enough buffer now. And many people keep trading. So maybe do 30% for the first payout. And then if you have another smashing month, do 50% the next time. Okay? But yeah, you can take some money out now, just don't take 50% because I don't think that's going to leave you with enough cash. And well done. That's very good. What time frame? So how long did you take to do that? If you're going to tell me 5 days, then I'm going to get angry because that's too soon. But, 2 weeks, a month, that's actually a very good return. Yeah. What is HGH? It's copper. Also, human growth hormone. That's a joke, obviously. All right, guys. I'm going to, like I said, and Jay says caffeine is no good for psychology while trading. Your opinion, mate. Caffeine is one of my main food groups, and I ain't quitting that, as is nicotine. So there you go. Woo. D, not a nun. Yeah, happy Monday. Let's take it slowly. So this is Monday, end of the month as well. So this is the last day of February. Let's not mess it up into the end of the month. If you've had some profits, especially if you're in an XFA or in live, this is the time to start winding things down. Maybe enjoy the profits, just put a withdrawal request in like Program FX and not continue to trade into the end of the month. That could be an idea too, right? Thank you for hanging with me. If you're not on Discord, what are you doing? So we've grown to 100,000 people, and you can come and join us. I have my VIP group over there, and it's all pretty fun. I'm going to put it in... Oh, I think that was the wrong link, so give me a chance. Yeah, that was the wrong link. Well done, Dee. Yeah, so Topstep, Discord, this is it. Nanka, I know that it's the 24th of February, but February only has 28 days, if I'm not mistaken. So this is the last week of February, yeah? Correct. So I don't know what you've been smoking today. Now, if you want to come join with us, you've seen Paul H. He's awesome. He's, basically a part of Topstep at this point. He started off by filling out this casting form. So if you want to come and trade with us, doesn't matter if you're on the big board or you're just starting out, come and share your story. Come do some trading with us. You said last day. Yeah, I meant last week. Yeah. I corrected myself. Yeah. So I will see you guys again tomorrow for another episode, another class of the London session. We can have a recap of this copper trade, see what they want to do with it. But like I said, I have a time stop, which will be 1:30 p.m. my time, which is exactly when COMEX starts. Thank you for hanging. Thank you for hanging with me. Thank you, Bruno. Yes, I said last day, and then I corrected myself. I said last week, if I believe. So yes, sorry about that. I will see you again tomorrow. This has been TopstepTV, the London session. I'm Marcus Tucker D. See you again very soon. Take care.